On InnoAgora for 2024. We start the series of webinars on a monthly basis, inviting distinguished guests from the business environment, having plenty to say and share within and among the universe of startups and early scale-ups that they're following InnoAgora, and not only. I have to remind you that this venue will be recorded. And we do have the luxury and the pleasure to have with us Aon in Reinsurance, who are the most prominent people to advise us and share with us their expertise on how to protect our entrepreneurship flair from any danger that comes from outside or from the inside of our business activities. We have together Mr. Manolis Yatounis, who is the head of the Greek office, Ms. Karaiskou, Mrs. Kyriakouli, and Mr. Yanouris. And I don't want to take more from your time. I'll give the floor to Mr. Yatounis. Mr. Yatounis, feel free to follow what you do best. Thank you.
Thank you. Thank you. Thank you also for giving us the opportunity to step into this forum and present some solutions we believe that are useful for the startup and early scale-up business. I would like to say a few words both about Aon and about reinsurance, because some of the attendees may not be familiar with the meaning of insurance and the usage of it. Starting from Aon, Aon is a global organization. We are present in more than 60 countries. We are.
You have to elevate a little bit your voice. I apologize.
Is it better now? Because I have high decibels, so I try to keep low. Is it
yes, please. Yes. Go ahead.
So, Aon Insurance Solutions is a part of Aon. Aon is having three distinguished parts. Number one is the retail broking, as we call it, direct broking, intermediation between businesses and individuals and insurance companies. The second part is the wealth, which runs into social security systems, employee benefits, etc. And it's quite popular, especially in the United States. And the third part, it's the reinsurance side of things. And reinsurance practically means the insurance of the insurance companies. So as individuals and enterprises are buying insurance, the same rules more or less apply to an insurance company that will go to the reinsurance market to buy protection for the risks they cover as well as for their balance sheet. So Aon, in total, we are about 50,000 employees, and reinsurance is just 2,000. So insurance has the characteristic of having small number of contracts, but big volume of premiums, and especially big volume of premiums because the difficult risks will first pass the door of the reinsurance, and then when they are understood and there is experience, they will go to the door of the normal insurance. This is one of the reasons we chose from Aon to have the reinsurance team, because startups are usually, in vertical commas, exotic for the insurance companies, because there are new businesses, there are businesses with not a proven track record, so usually they will come to us, to the reinsurance side of things, in order to handle them. So Aon is an organization operating in more than 50 countries, 60,000 employees, about $14 billion commissions. You can imagine there are hundreds of millions of dollars of premium. In Greece, we are having all the distinct parts of doing insurance and wealth. We are transacting more than 100 billion euro premia. We're 30 people on the reinsurance side of things. There are another 50 people on the retail side and another 20 on the wealth benefits. And we're having a fully fledged team of 15 brokers.
And Manolis, if I'm not mistaken, you are quite very close to startups personally, aren't you?
Yes, we are quite close. We are insuring quite a few nice startups. And personally, I have another angle which is quite sentimental because my son, my big son, is working for one of the leading startups in Dubai on the fintech. So what I did this morning, I said to him, please give me some guidance because I'm going to talk to a bunch of very clever young people who and so the startup industry or the startup ecosystem better, you know very well that has suffered the last 2 years because there is the global economic turmoil and also we have more expensive cost of capital, much more expensive, especially with the bonds. So for you guys looking to raise funds, it's quite a challenging period. Of course, if I understood well from Panagiotis, you are mainly Greek startups. So Greece has, I wouldn't say a separate path, but Greece, after 15 years of economic crisis, including 4 years of COVID, has really taken an upturn, an uptick in the economic activity. So it's a bit better than, I believe, the environment for startups than in other territories. So the Greek economy is booming, so people are more willing to invest, despite that they can get a 5 or 6 or 7% yield in a bond. And but also my son told me that this is a period where startups are looking and monitoring very closely their expenses. So here today, and I'm closing here my introduction, we will be looking to protect you with the right insurance products for the risks you are running, but also to minimize your costs, which is quite important for this period of time for the startups. So if Panagiotis agrees, I would like to pass the floor to Mr. Adonis Giannouris. Adonis is one of he came and joined us 6 years ago as a junior, working at university. Now he is climbing the hierarchy quickly, and he will present the first product. Adonis.
Thank you. To remind you all, we will be having the opportunity to ask questions by the end of the presentation, and feel free to elaborate. Thank you. Go ahead, please, Mr. Giannouris.
Following that very nice introduction by Mr. Siatounis, together, first of all, hello and welcome everyone. Thank you for joining this webinar. Together, we're going to discuss about professional indemnity insurance, which in our opinion is a very useful tool that will provide you with financial protection, especially vital for startup businesses like yours. To begin with, we're going to explore what and why, two very important questions in order to be able to comprehend this insurance cover better. Firstly, what is professional indemnity insurance, or as more commonly known, PI insurance? And secondly, why do you actually need it? So, PI insurance is a risk management tool that will provide you with financial protection against claims made by your clients and third parties, arising specifically from your professional services, instructions, and/or advices that you have given them. This means financial loss you have caused to your clients by being professionally negligent. A very simple example here would be that you made a mistake in a piece of work which led to a client having a financial loss, and then in turn, they are seeking compensation from you. Having said that, what is its purpose? Its sole purpose is to provide you with protection against claims where your advices or services have caused one of your clients financial loss, and to shield your business against legal actions due to your alleged professional negligence. Moving on now to why do you actually need it? How would you actually benefit from buying such a policy? 6 main reasons come to mind. Its nature is actually service-centric, meaning that it's vital for startup businesses where mistakes like poor advice could result in client losses. The financial impact. even if a claim one of your clients has brought against you is actually completely baseless, there is a high probability that legal defense costs will be needed, and those costs can be substantial burden to your business. Thirdly, when a claim occurs, your reputation can take a hit. Thus, amidst legal challenges, this policy can also provide you with financial support and possibly even PR assistance. Then we have mandatory requirements. Some professions, like ours, for example, an insurance broker, is actually required to maintain a PI policy by law. We're going to delve deeper in this topic in the next slide we have. And last but not least, it's future proofing. You will essentially lay a solid foundation by securing PI coverage early, and you will be protected against potential liabilities, hence minimizing future risks for your startup business. Moving on now. Now, let's discuss about several professions either required to have a PI policy or would benefit by having one. In Greece, 4 professions are obligated to maintain a PI policy by law, those being the statutory auditors, insolvency administrators, insurance intermediaries, and tour operators. This may differ from country to country, from legislation to legislation, thus it would be sound to check depending on your own situation. Now, which are some other professions that would benefit from having such a policy in place? Many actually. Anyone who is considered a professional could acquire a policy like that. Law firms, tech companies, consultants, architects and engineers, media companies, contractors, real estate agents, certification companies are just some examples. Having said all of those, and so that you can fully understand what can occur to each of those professions, here below we are presenting you with some basic claim examples. Starting from the 4 obligatory ones, let's say you are a statutory auditor and you have made a calculation error on an audit, which caused your client to have to pay higher penalties. Your client will in turn seek compensation from you, and this is where your PI policy will come into play and cover said amount if you were found liable. Next, let's say you are an insolvency administrator and you have delayed a liquidation, resulting in financial loss to the creditors. Then they will file a claim alleging negligent advice and will seek these amounts from you. An insurance intermediary, this is close to heart. Let's say an insurance intermediary has suggested the policy switch to one of their clients. Then when the client faces a loss and the new policy doesn't cover it at all, they will proceed with seeking compensation for those uncovered losses from said intermediary. Next, for the last one of the mandatory ones, we have the tour operators. Let's say you work as a tour operator, a travel agency essentially, and you fail to deliver promised services on a trip. Your client claims that you provided misleading information and will seek reimbursement from you. This is where your PI policy will come into play and assist you. Now let's take, for example, a law firm. Let's say you have provided poor legal advice to a client regarding a business contract. You have essentially made an oversight leading to financial losses for said client. The client will claim negligence, asserting that the law firm's advice was flawed and caused monetary harm to them. Tech companies. Let's say you are a tech company and you have developed a software solution for one of your clients, but the product contains critical bugs that lead to system failures and data losses. The client asserts that the tech company's negligence in product development has caused them financial harm and will demand compensation from you for the damages incurred. And lastly, we have the consultants. Let's say you have a consulting company that provides strategic advice to a client regarding a market entry strategy, but the implemented plan results in financial losses. The client alleges that the consulting company's advice was flawed and led to an unsuccessful market entry. Then in turn, they will seek compensation for the incurred losses. Moving on now. So for our final slide, moving on now, having discussed about what PI insurance is, why do you need it, and the various professions that would benefit from it, to finally, what does it actually cover? And which are the core exclusions of the PI policy? Starting from what is covered, two are the main things here. First, it's yours and your business's legal defense costs that will arise from a claim. And second, the compensation costs that will be awarded to the client or third party if you are found liable. These are some core coverages, but there are also ways to extend your policy to be a bit broader. You can do that by adding policy extensions, as we call them in insurance, sometimes at an extra cost, sometimes not at all, as this will be already included in the policy. And this all depends on the insurance company you will choose. Some of these extensions are, firstly, we have employee dishonesty. And employee dishonesty is being unaware that one of your employees is stealing money, altering checks, committing forgery, and this results to one of your clients having a financial loss. For example, you are an accountant and one of your employees is stealing one of your client's money, and as a result, your client at the end receives penalties from the tax authority due to non-payment. Then said client will file a claim seeking compensation from you. Let's make a small note here that managers and officers are not covered for dishonesty. It's only the employees who are covered. Then we have libel and slander, such as making a claim about a competitor that is untrue. Now we have an intentional breach of confidentiality. For example, an employee emails an attachment containing a client's business intentions to a competitor. In turn, your client files a claim seeking compensation for that potentially lost business that was lost to that competitor.
Can you imagine that most of the companies that are here today, they're dealing with non-disclosure agreements with clients, but they don't care about their internal policies, what kind of danger they face, so yes, it's disseminating this information is crucial. Let's go ahead.
Thank you, Panagiotis. Sorry, but
Thank
this is exactly why it is extremely difficult for a startup, especially for the first couple of years of operation, to obtain such a policy, a professional indemnity policy. It's very difficult for somebody to provide insurance capacity to cover.
Thank you, Mr. Siatonis. Moving on now, we have also an intentional breach of copyright, also very important. Let's say, for example, that you used someone's picture in your advertising without their permission. Let's say that someone was a model of some sort who usually demands compensation for such an activity, and you didn't pay them initially. So then that model will file a claim seeking compensation from you. This is where your PI policy will come into play and assist you. And lastly, we have a pretty simple one, which is loss of documents or data. Let's say you are a lawyer and you lose an important piece of an important document, which leads to one of your clients facing a financial loss. Then said client will in turn, go back and seek compensation from you. These were some core extensions that you can have in a PI policy. Moving on now to one of the most important parts as well, it's the exclusions of the PI policy. It's what you are not covered. Starting is the already known claims or circumstances which may lead to a claim prior to acquiring that policy, that new policy that you're going to get. It's deliberate acts of wrongdoing by you and acts which are considered criminal. We don't cover criminal acts with insurance at all. It's insolvency or bankruptcy. It's fine and penalties imposed to you as the insured. It's allegations of negligence made by your employees against you. These are typically covered under an employer's liability policy. Loss or damage which does not come about as a result of your advice or service. If you have not done it, then you cannot be liable for it. It's pretty obvious. And this is a bit of a tricky one. it's any assumed liability under a contract with a client. This is what we call in insurance contractual liability. In an insurance policy, you will see it as excluding any liability assumed by the insured by contract or any other agreement, including any express or implied warranty or guarantee, unless such liability would have attached even in the absence of such contract or agreement. And to make it simple for you, for example, let's say you are an architect and you have a very strict deadline to deliver a very specific design to one of your clients. Let's say you miss this deadline, which results to daily fines of, let's say, 100 euro for each day that passes after that deadline. So these specific fines are not covered by API policy. And lastly, we have third-party bodily injury or property damage. These are typically covered under a public or product liability insurance policy. And we have put an asterisk here because depending on the professional services that you offer, this policy, the PI policy, can actually be extended to cover claims arising from bodily injury or property damage only if it was a direct result of the professional services provided by you. This is the end of professional indemnity insurance. I'm sure you have a lot of questions to ask, but please leave them for the end. So up next, I think we have Irini with a DNO liability. Irini, the floor is yours.
Thank you very much, Antonis. Hello from me as well, and thank you for having us today. My name is Irini Kyriakouli, and I am Head of Financial Solutions in Aeon Research Solutions. And together we will discuss about the Directors and Officers Liability Insurance. What does this cover? Main exclusions? What are the benefits for a company that buys this insurance? We hope you find this interesting, and we remain at your disposal for any clarifications and further support. Let's begin with our first slide and see what is the DNO liability insurance. Directors and officers insurance offer liability coverage for managers, directors, and officers to protect them and their personal assets for claims which may arise from decisions and actions taken as part of their duties. Today's increasingly complex legal environment means businesses face a heightened prospect of liabilities and litigations. Companies usually purchase DNO insurance because lawsuits are expensive and the costs associated with them are also rising. What does the DNO insurance cover? DNO insurance typically covers legal fees, settlements, and financial losses when the insured, meaning the manager, is held liable. Common covered allegations include breaches of fiduciary duty, failure to comply with regulations, employer liability, lack of corporate governance, creditor claims, reporting errors, and insolvency. The policy can also be extended to cover the company itself if it faces litigation. What does DNO insurance exclude? The DNO policy does not cover criminal or fraudulent activities or any illegal profits or remunerations of the insured to which they are not legally entitled. It also excludes uninsurable fines and penalties, although in some wordings, specific fines from regulators could be covered with a sublimit. The antitrust or unfair trade, for example, class actions from clients or competitors alleging deceptive trade practices would be excluded from coverage. Prior acts are also not covered, meaning the claims that were known already or occurred before the DNO insurance policy's effective date. Moving on to the next slide. Who is insured in the DNO policy? The definition of insured includes the company's managers, board members, shadow directors, and officers. It also includes the employees who are not actually managers, but they have extended duties and make decisions on behalf of the organization.
That means everybody, huh?
Exactly. And also the director's lawful spouse and heirs. The coverage is usually for current, future, and past directors and officers of the company and its subsidiaries. The D&O insurance covers the individuals for acts performed or omitted while they were in the company, and of course, as long as there was a D&O policy in force during that period. As already mentioned before, the coverage can also be extended to include the company itself if it faces litigation. And we could see that in examples like employment liability of the company and security claims. Now, who could be a possible claimant for this policy? It is interesting to see that the company's employees is one of the most common sources of a D&O claim against the company and the individual directors and officers. Claimants could also be the shareholders, regulators, government bodies, competitors, and liquidators. Let's go to the next slide and see why is D&O insurance beneficial for the company? What are the advantages of the directors and officers liability insurance? Any business, public or private, may benefit from having directors and officers insurance. Lawsuits targeting directors and officers are becoming more common, and without D&O insurance, the company's assets and the personal assets of the directors and officers are at risk. Thus, the advantages from buying the D&O policy are the protection for individual directors and officers against personal liability and the protection of the company itself, and also the strengthening of the company's financial planning by eliminating the fear that the company will need a stock of funds to combat potential litigation. In addition, the existence of a D&O policy helps to enhance the reputation of the company, secure funding, or eventually go public. By having a D&O policy in place, the company is sending a message that the business is committed to protecting the interests of the stakeholders, including directors and officers. It also helps to attract and retain best talent, as this can make the company to be more attractive to talented individuals who are looking for strong benefits package. Which companies would buy D&O insurance? We can say that all organizations, including public, private, startups, and non-profit companies, can be vulnerable to D&O claims. Small businesses are often under the impression that they don't need directors and officers insurance and that they won't experience these types of claims. Now I hear, sorry. However, this is not the case.
It's just because we opened the microphone of Mr. Manolis, but Manoli, this is the creating the problem.
But it's important for those attendees that are having a multi-shareholders panel in their companies. Sometimes this is also a requirement when they have outside directors or a big number of investors. This makes it quite critical, correct, Irini?
Exactly. That's why we say
one shareholder, you cannot sue yourself. I mean, what you can do, but if you have a lot of shareholders in the company and also sitting in the board of directors, then it makes this kind of coverage quite crucial and essential.
Exactly. Thank you very much. So I understand that this is not the case that small businesses that small businesses can often face such litigation in their daily experience. And even without directors or investors, a day-to-day business of running a startup could still trigger a lawsuit. Hiring employees, the everyday business of such companies, such as raising venture capital, contracting with vendors, suppliers, and customers, are important for any startup, and they also leave your business open to a potential claim. This is all from me. Thank you very much. And we're moving with CyberEdge and my colleague, Mrs. Anastasia Karescu.
Hello, it is wonderful to be with you, and I would like to thank the Hellenic Development Bank for inviting us to this conversation. My name is Anastasia Karaiscu. As I go into introduction, I joined Aeon Greece 2 years ago, responsible for placing reinsurance programs for specialty risks. But most relevant to this discussion today is that I was a senior underwriter in AIG for almost 12 years, responsible for the cyber portfolio. Due to the time restriction, we are looking this insurance in a high level, skipping a lot of technical details. So it is important to keep in mind that cyber insurance is a new product line with small market share locally and globally compared to the other lines of business such as property or auto, but with a very, very high dynamic. Cyber risk is a dynamic, evolving risk, absolutely connected with the development of technology and with the prevailing conditions such as the adoption of work of home. During COVID, a new norma has been established in which companies are more dependent with technology than ever. It is a fact that as companies have a growing reliance on technology, this leads to increase in cyber attacks, with ransomware to be the #1 cyber threat in terms of frequency and severity. Well, I don't know if you are familiar with the terminology of ransomware. Ransomware is a type of malware that blocks access to the victim's corporate or personal data unless money is paid. Nowadays, successful cyber attacks at companies through ransomware practices have increased in a dramatic way, and the attacker only needs to be successful one time, but the company 100% of the time. So must be always on alert, because attacks become more and more sophisticated since they need to find new ways to be always one step ahead. And this is why the insurance companies are now more careful and selective about which companies they decide to insure. They include cyber assessments regarding the client's systems and the level of its security.
And this is, sorry to interrupt, but this is a policy also from the state and the public authorities, because they have created the data protection authorities that sometimes stipulate this kind of arrangements and necessities to be included in the company profiles and policies. But nevertheless, they give you somehow a relief if you do have such an insurance policy to cover this kind of threats, and they see you a little bit lighter on their severity of the fines that they finally impose to you and not to the clients, because you are the liable of leaking the information. So this is a very interesting thing that it did create a whole industry around it.
Of course. And the regulation is more strict now, so the liability of the companies is more and more important regarding the personal data and the confidential information that they keep in their systems. And this is why, in particular, in the underwriting process, underwriters need more technical information in order to decide whether the coverage will be provided or not. So employees from different departments should cooperate to gather this information. Furthermore, insurers, in order to offer the coverage, require specific security controls multi-factor authentication. I am sure that you have heard about MFA and how important and essential is MFA for the systems. Endpoint protection, email security, web controls, etc. Companies which don't have the controls are facing problems to secure the coverage, or they are insured with higher premiums, deductibles, and more restricted terms. So the positive impact is that companies mitigate the risk before purchase the insurance protection. And this is very good for the society and the insurance market as well. Okay, if we can change the slide. Now I would like to take a look of insurance product itself. As it is related to ransomware, as we said, it is more than a reimbursement policy. It also includes loss control benefits, such as employee trainings, vulnerability assessments, phishing exercise, and so on. When we look at the cyber insurance, at the end of the day, is of course a risk transfer mechanism. The risk is transferred from the client to insurance companies. And to be more specific, cyber insurance covers all the financial costs associated with a breach, including but not limited to first-party costs, such as data restoration, notification costs, network interruption, cyber extortion, GDPR fines, IT forensic costs, but also third-party losses from the legal liability you have as a result of a failure of the company's network security to protect third parties' confidential information. So this insurance products is a combination of first-party costs and third-party costs. But if I may, the most important is the extras that we have in cyber pollution, in the cyber policies, the services which are provided from specialists, because the clients don't know what to do when they have a cyber attack. And believe me, from my experience at AIG and from my experience from the claims, everyone can be attacked today. Not only a big retailer, hospitals, banks, and so on. We have seen big companies, medium-sized business, that they didn't have the right expertise and they lost their business. So the incident response plan consists of legal, PR, IT negotiators, is the most vital thing to protect your business. Another thing that I would like to point out, and I am sure that you are interested, is the brand issue, which is extremely important for your company, because you can come out of a cyber event, but you can come out with a harm in your reputation. Through insurance, you get professional people, for example, to inform media. But if you don't have the expertise, you may deal with consequences regarding your reputation, such as company shares will go down, collaborations and deals may be interrupted. When you are insured, you have these consultants, a call center 24/7 to help you to deal with the incident. And cyber, based on the reports, is now the #1 risk that clients are facing. Thus, it is better to be proactive and well prepared. Last but not least, I want to emphasize on the fact that cyber risk used to be an IT issue. Now it is a board of directors issue. This is why the buyer is not the IT manager, but the board of directors. It is a matter that concerns the CEOs, who are responsible for the company's reputation and the continuum of company's activity. The cyber awareness and the cyber security are not only a matter of a good IT department or money to invest in security measures, but most of all, it is a matter of a company's culture. I don't want to bother you with other technical information. I will leave it there, but I'm really happy to answer the questions you may have.
Thank you very much, Ms. Karaescu. So are there any questions in the chat? I don't think that there's any question. So let's wrap it up. Thank to all of you, to the Aeon team, Mr. Skiatounis, Mr. Giannouris, Ms. Kyriakouli, and Ms. Karaescu. So to all of the audience, stay tuned for our next webinars. We'll be more than happy. Oh, we have a question. So Ms. Karaescu, we don't know, we think. So there is a question that says, if we do not meet a deadline, what kind of insurance do we need?
Yes, if you can explain a little more the question. What do you mean if you don't?
That's the question. So Mr. Iliadis, if you can hear us, could you please explain more the question?
I think it has to do with everyday job of the professional of the company. It's like a PI. This would be a PI, professional indemnity issue. This is what I understand. I don't think it has to do with cyber.
Let's give Mr. Iliadis a moment, so he can type his explanation.
I would say on this one,
Αντώνη, είναι για το PI,
yeah,
correct?
I would say on this one, if this is something put on a contract, then this would have to be covered under a contractual liability insurance policy, which is different than a PI policy completely. That answers the question.
I think that answers, yes. No, that didn't.
If it is unintentional, it is not intentional meaning, and you have caused financial harm to one of your clients, and they will seek compensation from you, then yes, it will be covered. If it is unintentional and you have made a mistake, this is what the PI policy covers. It covers errors and omissions.
Mr. Iliadis, we have activated your microphone, so if you can, if there's anything more to ask.
Yes, okay. Yes, now I can speak. Thank you for the info provided. Yes, we are in a very demanding project with very strict deadlines. Similar projects might have taken 5, 6, 7 years, and they need to do it in 2 years. I'm a subcontractor of the main contractor, but you understand that if at some point of time we do not meet the deadline, either the final deadline or the interim deadlines, they might come to us because we are a very small company, and they will try to find somebody to blame at some point of time. What kind of insurance do we need for this? Because the contract is by the primary contractor, but we are subcontractors and we provide services and they may say, oh, you did not do your job well, you did not meet the deadline that we imposed to you, or all these things.
Yes, go ahead, Mr. Siatonis. You are on mute. You are on mute.
Με ακούτε?
Yes.
Η ερώτηση αυτή είναι ακριβώς αυτό που είπα και την ώρα που παρουσίαζε ο Αντώνης την επαγγελματική ευθύνη, αυτό που έχουμε στον τίτλο Professional Limits, sorry for my Greek, switch to English. So it's exactly why a startup should buy insurance of professional indemnity. It is the ultimate protection of any new business. When I started my career as an entrepreneur, I created an insurance intermediary business. So the first thing I did is I bought professional indemnity insurance because, as Mr. Iliadis, I think, asked, it was the wonder what will happen if we will get a blame or an accusation that we didn't perform our duties properly. So that's why you need a professional indemnity in every stage of any company, but you understand a company that starts and has a lot of expenses, a lot of exposures, they need these σαν σάκου ασφαλείας που λέμε στα αυτοκίνητα. It's not a safety belt. It's your protection. You sleep very well, and you cover most of the cases that you will be accused for not performing your professional duties properly. And as I said, it's very difficult for insurers and the insurers to provide coverage for a startup because there is not proven track record. And it's important for you to provide as much info as possible and also to have a good broker to advocate your case to the insurance market.
Okay, thank you very much.
So, Mr. Iliadis, I think that Aeon team got you covered. Mr. Siatonis, could you please mute your microphone? Thank you very much. So I don't think that there is more questions. So that's all. Aeon team, thank you very much for this webinar today. It was our first webinar of 2024. For the rest of the audience, if you please stay tuned for our next webinars. We will be more than happy to have you with us.
Thank you very
Thank
much
you
for
very
being
much.
here.
Thank you very much for having us.
Thank you.
Thank you. Καλή χρονιά σε όλους.
Καλή χρονιά.
Καλή χρονιά.
Γεια σας.